a lot of people got caught in lithium explorers during the downturn, and a lot of them turned into lobster pots, and people couldn't get out. And then there was a couple of false starts in lithium as well, dead cat bounces, and people put more money in. And so right now people are just being really cautious, I think, about getting into explorers. But I honestly think Charger Metals is the most leveraged play to the lithium price on the ASX. And
this is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website, link in the show notes.
I'll tell you what, it's a shithouse day on the market. Recorded Thursday, but far out. There is $0 EVs floating about everywhere, and we're going to figure out why this one is one with $6 or so million in the cash in the bank. Charger Metals, ticker CHR. Got it on screen here. Got the top dog on here. Bryan Dixon, how are you, mate?
Good, Matty. Yeah, it's a tough market out there, but that's the opportunity, right?
Yeah.
It's easier to know when to buy than when to sell.
Yeah. I like your new rule you're giving me, actually. Just buy in the last week of June each year and should be all good, and you would be correct at the moment.
Yeah, I don't give investment advice, but
neither do
that's one I stick to.
Thanks, mate. Right, buddy, mate. Oh, quick bloody plug for WA water boards. I don't know what the water situation is like down at Lake Johnston, mate. But if you need bloody water board drilling, short trip from Geraldton down to Lake Johnston for the top bloody water drillers in the game, WA Waterboards. Cheers, Jero James, for being back on board. Mate, Charger. So first thing I want to ask, now, you had two projects. You had Bynoe up in Northern Territory, which was encompassed by Finnis, which is Core Lithium's project, and you also got your Lake Johnston ground. You've just previously sold Bynoe to Core Lithium, and which is bringing some dosh in the bank. I've got the transaction up here. I guess why the decision? Why to not drill out Bynoe and put all your eggs in the Lake Johnston portfolio?
Look, Matty, Lake Johnston's our most advanced asset, and fundamentally the reason we're backing our Lake Johnston project is because we think our Medcalf spodumene deposit, where we just did a resource upgrade, is going to be a mine. And it's on a risk return basis, it's the best bet we can make. All juniors have got limited funds and limited resources, and we think by focusing on turning our Medcalf spodumene deposit into a mine is going to be best for shareholders. The exploration down there is quite easy. When you're drilling, you can see these big fat crystals, and even when you're doing RC drilling, and even in the chips, you can see the spodumene. Up at Bynoe, it's a bit trickier, where you got 50, 60 metres of cover, and all the lithium's washed away in that weathered profile. And so, the focus is on Lake Johnston and our Medcalf deposit because we're confident it's going to be a mine.
Yeah, and I see those. I assume that's the crystals you're speaking about are the ones behind your head at the moment in the background.
They're the ones. Yeah, and obviously in diamond core it's easy to see, but when you got large to mid-size crystals, you can see it in the RC chips too.
Yeah, and so this that transaction, we'll get the where the balance sheet is out of the road first, because you're gonna, the 3.75 mil that's coming in the door from the acquisition, then there's a 1 mil contingent payment, and then potentially a $10 million capped 1% royalty coming in. Is that, so you're going to be sitting at about pro forma 6 million or so after this transaction?
Yeah. Obviously we've spent a bit of money this quarter, but it's going to be well over 5.
Yeah. Okay. So we're sitting at about like potentially 2 mil EV, and it's pretty similar to what bloody like Delta Lithium's the same. Like if you take their Ballard holding with I think they've got a negative EV taken into account what they've got at Mount Ida, and there's, I think looking at your deck, like I think there's not many. There's not many lithium resources in Australia above 10 million tonne. I think this is one of them. I think there's 6, is there? Is that right?
Yeah, there's 6, and we're the only one, the only spodumene deposit in Australia, more than 10 million tonnes, that doesn't sit in a $100 million company. I think, our market cap's about 8 million or something. Lithium's gone crazy over the last 8 months. That money's kind of flowing into the producers. They're back trading at record highs. The developers have all got their money to go again, and Core Lithium are fully funded to, turn that back on. The developers have got their money to go. It hasn't really trickled down to the explorers, and that's the opportunity. But Matt, if you go back 3-4 years ago, there's 1,000 bloody explorers that reckon they had the next lithium mine, and today
pegmatites were everywhere.
Pegmatites were everywhere, but not all of them are LCT pegmatites, and not all of them are spodumene pegmatites, and even on that list, a lot of them aren't spodumene. We've done the mineralogy on this, and you can see the crystals in the core and the background there, and this is pure spodumene. So, and it's got a very high tantalum content as well. Yeah, so.
Yeah, a correction to what I said before about like this is one of 6 undeveloped plus 10 million tonne, because obviously you got the big dogs doing their thing, but it's a lithium in Australia is a very big dog dominant commodity, isn't it?
Yeah, totally. I mean, basically there's only 6 deposits you see on that slide there that aren't controlled by multi-billion-dollar companies, and I think the lithium producers are valuing these things a lot higher than the ASX right now, and a lot of people got burnt on lithium. People were paying ridiculous money for moose pasture, in far off places. WA is still the biggest lithium producer in the world. And we're in this situation where we've got to go and add some value, or one of the big boys will buy us.
Yeah. No, look, I'll show the region. I think you've got it on this one, but like you're in proximity to. And speaking of undeveloped ones, there's obviously Liontown's Buldania, which is sitting there. You're close to Develop's Pioneer Dome. Then we've heard Bill recently talk about, they're advancing plans for DSO at their project, like rapidly. Like that's come back to have some value in Develop, and then you've obviously potentially got the same option. But I guess the first thing to probably ask is like how the permitting's going to get that mining license on the lease. I assume that's your biggest bottleneck at the moment.
Yeah, look, critical path on any mine these days is permitting, and we're going 100 mile an hour on the mining lease application. We've done all of the flora and fauna that we need to do to get that granted, and we're in negotiations with the Naju. The Naju mob are very commercial. They're in that region, they've done hundreds of deals, and that will be getting a native title agreement with the Naju will be critical path to getting it granted. But, we're really focused on running that in parallel to the drilling to grow the asset and the metallurgical and mining studies to turn this into a mine.
Yeah, yeah. And so, how long's the mining lease application? Is the native title agreement that's all in parallel with the mining lease application, like they're contingent on each other?
Yeah. So your native title agreement will generally be the last step to getting it granted. So
Yeah.
the only objectors, it's a standard thing. The native title party always objects to your mining lease application. You go and do an agreement with them. You get them out there to do some surveys and have a look at it. We've had them out there in the past doing surveys from an exploration point of view, but we'll get them back out there, to finalise that agreement.
Yeah. Okay. So, because you look at the deposit, like I assume having 45, like they're stacked pegmatites, as you can see on screen here, but it looks pretty amenable to following the benches down as you mine it. I guess talk about the mineability of these stacked pegmatites in an open pit sense.
Yeah. Look, Matty, you're a mining engineer. I'm not, but we're all bush mining engineers, bush geologists. I look at that and I think it's going to be a mine. So 10 million tonnes. We see 10 million tonnes being a critical size you need, to create a mine in the lithium space, and that's always been the hurdle we've wanted to get to. This thing will get much bigger, but today, you do a gold equivalent on that, and it's over 1 million ounces at 3 grams per tonne gold equivalent. Now,
maybe not today when gold's in the 3900s.
Well, that calculation I did last week, but it's not going to be far off that.
Yeah, yeah.
You got a nice little starter pit there that's at $1,000 a tonne, concentrate price, and then we've got Intech Mining doing the mining studies, and we need to do a bit of a trade-off study on where we pull the pit up and and where you go underground mining. When you've got nearly 60% of that resource, and you can see the graph on the side, the best tonnage is the stuff close to surface, and 59% of that total resource is in the top 200 metres, and 81% of it's in the top 300 metres. If this was a gold project, we wouldn't exist. Someone would have taken us out. Now, the challenge is it's a lot easier to value a gold project. People understand the economics around gold, but if you told someone you had 1 million ounces at 3 grams per tonne, Matty, you have a look at that and see what you think.
Yeah, you'd be bloody even on a falling gold price environment, pretty much. Yeah. So this, I guess, how real's this DSO opportunity at the moment? I know you're a bit far away from it, but shipping DSO out of the port of Esperance down your way is at above $2,000 a tonne spot SC6 prices. Is this a potential easy path for companies? Look,
nothing's easy in mining, but you talked about Develop's process, and Develop put out some numbers when they announced their FID on their Pioneer Dome project just down the road, and I think they're investing $40 million in capex to make $200 million over 12 months, and that's shipping 850,000 tonne of material down the highway to Esperance. It's about a 280 kilometre truck, I think, to get it to Esperance, and you can ship it out in bulk. So that's definitely an option for us. And we're currently doing some ore sorting studies, and we'll have hopefully an announcement out on that next week. And basically, if we were going to go that direction, we'd do a mine, crush and ore sort, and then truck it down to Esperance, which was about 200 kilometres.
Yeah, but then also like looking at your location, what you've between your proximity to, you got Mount Catlin, you got Covalence Project, and you've got Bald Hill and Mount Marion.
So Covalence is the closest one. They look like they got plenty of ore based on that resource. I mean, it's huge, right? You know, then you've got Mount Catlin. Rio Tinto are a 5% shareholder in us, and you know, we had a earn-in arrangement with them up until December last year. They still own 5% of the company. It's about 190 kilometre truck to get it there, but that's $25 a tonne, you know. So, you know, when you got spodumene prices north of $2,000 a tonne, you know, you can truck this a reasonable distance, which is what you're seeing in gold at the moment. You know, and you think about if you got 3 gram per tonne gold, you can truck that a fair way. You know, Bald Hill is getting turned on again. You know, that's probably 220 kilometre truck, and you can truck it there for less than $30 a tonne. So the good thing is we've got options, and we're now fully funded for a scoping study, and during that scoping study we'll have a good look at those options as we're running the permitting in parallel.
So with that $6 million, say $5 million, sorry, how much is going to be going towards scoping study, drilling, and activities required to go into that versus potentially further resource growth? I see, like, you had your Medcalf West project, it looks like a vertically steeply dipping project, which is hey, Bill might come and mine that for you. That looks like a great little underground
from an underground point of view. It'll have a shallow open pit there, but you know, there's 1.2 kilometres of strike there, and we don't really understand how it relates to Metcalf yet. And you know, there's a big hole there between Metcalf West and Metcalf, and you know, so we will be infill drilling, but we'll be, as a priority, we'll be drilling out that Metcalf target. And, you know, it's about 300 grams worth of drilling to throw a resource over that. So, you know, we've got to keep growing the size of this thing. The market does focus on size, but, you know, very quickly, I think this will be bigger than Mount Catlin and bigger than Pioneer Dome.
Yeah, and with, I guess, where the grade, where are you seeing the pockets of higher grades? Because your resource is sort of 10.6 million tonne at 1%, but then you obviously got some, you know, a lot of, notably, if it's average one, you got a lot of sub one, and you got some much higher 1% grades. Where is the grade distributed?
So it's pretty evenly distributed, and you know, if you go back to the next page, you can kind of see that red line is the grade distribution, and the blue and the green are the tonnes.
Oh, yep.
So that shows each bench as you're going down, and so the you know, these stack loads, you will get a bit of mining dilution. We're pretty confident that the ore sorting will deal with that. So, you know, you got these white pegmatites, as you can see in the background, and then, the country rocks and fibrillite. So you're ore sorting black from white. You know, I think 60 or 70% of the projects in WA are using ore sorting. It's a well-known process. But you know, 1%, the grade gets better as you get deeper. As you can see, you know, we've drilled this down to about 400 metres. There's a couple of deeper holes, but you know, we're definitely seeing better grade as we get deeper, which hopefully means this can turn into an underground operation as well. It's, as you can see from that angle, it's not ideal for underground mining, but, the metal value, I think, can justify it.
Well, that, and by the looks of the depth of that pit's potentially going to 250 metres deep. So you'd be mining that pit for bloody ages.
So that pit optimisation is based on the old resource of 8 million tonnes.
Yeah.
So we've added another 34% metal, and it's not all at depth. We've really proved up the continuity on a lot of these lodes, and so we've added a lot of metal inside those pits. So those optimisations were done on the old resource, and we're currently in the process of redoing them, and I think you're going to see both of those optimisations pull deeper. We've got to do a bit of a trade-off study as to how deep you want to go on the open pit. There's a real trend in the industry, I think, in the lithium space to do shallower open pits and go underground. And the metal value's there. I mean, even at 1% grades, there's some really good metal value. But as we get deeper, the grade's closer to about 1.4, which is pretty similar to what Core Lithium and Liontown are going after.
Yeah, no, because there's not as many producing lithium projects. So everyone thinks, you have to be at that 1.2, 1.4, like what, based on what, Liontown and all that are doing. But if, do you feel if spodumene prices stay high and more stuff and it sustains at these plus $2,000 levels, that we'll be seeing more of these 0.8, 0.9s actually coming to market if they can still make money off it? Is there demand for that product?
So 1% lithium oxide is 3 grams a tonne gold equivalent. So that people really underestimate the value of the metal, and there's not enough peers there, but we're of all the juniors, we've probably been the most active, and we think we're ahead of the pack. And part of what we're doing, we've got to explain those economics, but I think people will fall off their seat when we publish our scoping study.
Yeah, because I assume it doesn't, it's not irrelevant, but the grade's irrelevant to a customer as long as the concentrate is a 5% SC con. I assume that if you still make money off mining it.
Well, it really goes with the cycle, and the lithium cycle is pretty bloody volatile, but you go back to the peak and everyone was sacrificing grade in their concentrate to get higher recoveries, and people like Mount Marion were producing a 3.7% concentrate and selling it. When the demand's there, you can sell anything. That there won't be any problems in us getting this to a plus. We've got to go and do the met work, but we're pretty confident we're going to get this to a plus 5% concentrate. Yeah.
So is the met work underway yet, or that's going to be sort of happening with the scope study?
So I'm hoping we'll have an announcement out next week on the initial phase. And then, in the next couple of months, we'll have a follow-up announcement. And, we're that confident this is going to be a mine. We're going straight into the PFS metallurgy as soon as we finish, this stage.
Yeah, so potentially scope and study by the end of the year?
Yeah. So it'll come down. The critical path for that will be further drilling. So once we've got the drill rigs turning, and we're very close to starting that next drill program, we can then put a forecast on when we can complete the scoping study. But critical path is getting an RC and a diamond rig back out there.
Yeah, cool. Right, interesting.
Look, December, January is definitely achievable.
Yeah. But if it's out December, mate, you can just really have a stress-free holiday. over Chrissy.
yeah.
It's all about you, mate. Mate, before I get on I'll finish on the register and stuff, but I'll quickly touch on the gold. Like, I've just read this for the first time this week, and I looked at the gold result. You got 3 metres at 18 grams at about what was she, 250 or so below surface. This is at Christmas Gold Discovery. You did the follow-up holes and nothing. Like, it just looks like there should have been gold there. Like, was this, I assume this just must have pissed
We were
you off.
excited. Everyone was excited. We got, so the 12 metres at 6 and the 8 metres at, 1.6, they came in on the 23rd of December, and I think by the time we got the announcement out, came out the day after Boxing Day. So we called it the Christmas Gold Discovery.
Is that right? There you go.
Yeah, and everyone was. The great thing about it, Rio Tinto had paid for the drilling, and they pulled out of the earn-in on the 10th of December, and then after they pulled out, we got these drill results back, and phenomenal. So they're the best drill results in this whole greenfield belt. There's no gold mines in the Lake Johnston belt. Forestona are converting a nickel plant into a gold plant there, but there's still no gold deposits. And we were hoping to have the first, and it didn't turn out that way. We thought long and hard about this. We thought it's most likely this thing is vertical. And so we drilled up dip and down dip and couldn't replicate it. But that gold's coming from somewhere. And there is a big gold anomaly across most of this tenement. And these are the first gold drilling holes that have gone into it in 13 years, I think, since Hannon's Reward had it. They were predominantly drilling for nickel, but they did a bit of gold drilling as well. So there's only been about 6 holes put into this project for gold, and there's some of the results we've got.
Yeah, is it like geologically? Like, is it a like as you said, it looks like it's like, well, if it's not above and below, where the hell is it? Like, was it potentially an orientation thing?
It
like,
could
is
be
this
an
gold
orientation
discovery
thing, and we're thinking about that, and we are permitting the next phase of drilling down there. But as you can see, it didn't go as well as we would have hoped, but you get that in exploration.
Yeah, so it's not dead. The gold exploration is. Still going to have a punt at it.
Look, when you're getting numbers like that, and you've only drilled 6 or 7 holes in 15 years for gold, I'm pretty encouraged. We've got to do a lot more drilling there to work it out. Yeah,
interesting, mate. Your register, it's a bloody interesting register, and considering there's probably not many companies that have lasted this long with 90 million, still only 90 million shares on issue, and then you've got, as you said, you've got Rio on the register, and you've got Core Lithium and Rio on the register. All still there. What's happening with so it's pretty tight, really.
Yeah, it's very tight. So there's only 90 million fully paid shares on issue after 5 years of being listed. So I helped float this company 5 years ago and put the deal together on the ground and help get everyone involved. And in September I took the reins as managing director because I really believe in the project. That Finnis was an interesting story. They went and drilled this Blackbeard project that adjoins our ground, and they've got an exploration target of 7 to 10 million tonnes there. And they made a non-binding indicative offer to buy the company, and at the time we said, well, look, Lake Johnston's our main project. There's obvious synergies with Bynoe, and we're happy to have a chat around selling our Bynoe project too, but we'd prefer to keep the company, because we believe in Lake Johnston. so there's been an 18-month dance around selling that project, and I think we've come up with a good deal that it's a win-win for both companies. There's obvious synergies there. There's 20 prospects, and we'll get leverage to those further exploration there through the milestone and on the resource and also on the royalty. But that plant is only 9 kilometres down the road. So, I think it's a good deal for both companies. Rio Tinto, we signed a earn-in and joint venture agreement with Rio Tinto Exploration. They'd pegged all the ground around our Lake Johnston project, and they came to us and they said, look, we like the ground and we want to, so, we signed a joint venture with them just as the nickel price was crashing 2.5 years ago. And 2 years later, they had a change of MD. They decided they didn't want to be in spodumene in Australia. They're focused on their lithium brines. So we got the project back just as the lithium price was coming good again. And, so you've got to find ways to work counter-cyclical because the cycles are so short. And, so having big brothers in there and doing M&A deals makes a lot of sense.
Yeah, because down in this region, like with, yourself, Baldania, a bit going on at Pioneer Dome, which is in it developed, like is there much consolidation to do down there? Is like potentially some more assets to come in? Like, I guess what's the biggest, any big catalyst that might happen outside of the scope and study? What have you got your eyes on? Just not specifically, but is there potential to get some other stuff in here?
M&A makes sense, particularly where there's synergies. So if you've got projects sitting next to each other, we'll look at buying additional ground that makes sense to our Lake Johnston project. And the flip side of that, you go back and look at those 6 companies with resources. I think MinRes has got a stake in 4 of those. So I think they're sitting close to 10% on 4 of those companies. So the lithium producers are valuing these things a lot higher than the ASX currently are. And a lot of people got caught in lithium explorers during the downturn, and a lot of them turned into lobster pots, and people couldn't get out. And then there was a couple of false starts in lithium as well, dead cat bounces, and people put more money in. And so right now people are just being really cautious, I think, about getting into explorers. But I honestly think Charger Metals is the most leveraged play to the lithium price on the ASX, and we've got a huge value of metal in the ground, and there's a pathway to this being a mine. And, you've always got to look at, is it better for us to raise the money and do this, or is it better, to bring in a big brother, and that's part of being a junior explorer trying to develop things. But, we're going to run 100 mile an hour to try and turn this into a mine.
Yeah, Ingy, you've bloody perked my, I don't say this to everyone, but that's perked my interest with the shares on issue, the market cap and what you've got. And I compared to put Delta in the same boat. It's interesting because it hasn't flowed in yet, lithium juniors. So, and look, spodumene price is good. Whether all this new supply coming online is going to move the needle on the whole supply-demand balance, we do not know yet, but...
There's a lot of supply coming on in WA, and you can see that. And WA is the first place where it comes online. But these big brine projects in the Americas, they're coming on really slowly. And there's been supply issues out of Africa, and you look at China, they've got environmental issues around the lepidolite mines, and they're very low grade. most of the analysts are still forecasting, spodumene and carbonate prices to keep going up because the demand's still outstripping supply. The Chinese are subsidising energy storage batteries, and we saw what happened when they subsidised EV batteries. That's what created that last boom where everything went nuts, and spodumene prices went from $600 a tonne to $8,000 a tonne. I mean, where do you see that? And it's when you get government regulation and subsidies, it's really got the potential to create huge demand. In what's still a very emerging industry on the lithium side.
Well, stationary storage wasn't even a thing on the last spike, was it?
They'd put it on the graphs and you'd struggle to see where it was on the graph. And, now it's, this year I think they're predicting energy storage is driving the growth more than EVs.
Yeah.
But EV demand's still been strong, and, with the Iran war and, what happened with fuel prices, everyone's thinking twice about, do I pay $3 a litre for diesel, or do I go and get an EV to run around the city?
Yeah. I've actually had a God, if my margin survives, I had a punt on Tesla because I was. That's pulled back a bit, and you would think EV sales this quarter are going to be very interesting post-Iran war because logically, you heard in Australia that you couldn't even find them, because they just went out the door that quickly because everyone wigged out about diesel fuel prices. So, and it makes sense. So, anyway, mate, thanks for all that. That's very interesting. Very interesting. It's
No, thanks, Matty. It's been a pleasure, and you've done a pretty good deep dive into a very unloved stock. But for the value investors out there, this is the deepest value you can find in the lithium space, I think.
Mate, there is always, trust me, it doesn't matter what the market cap is, there is always something to learn, I've figured out. Okay. So I thoroughly enjoy these chats. So, mate, thanks very much, mate, and put the skates on for that scoping study so you can have a good Chrissy break.
All good.
All good. Cheers, Brian. Thanks very much,
Cheers,
mate.
Matty. Go well.
You too, mate.